Good morning, ladies and gentlemen, and welcome to the BLACKBIRD PLC investor presentation for the final results for the year ended 31st December 2020. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll get a notification to you when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Ian McDonough, CEO, Steve White, CFO, and Stephen Strater, R&D Director. Good morning.
Good morning. Thank you very much, and welcome everybody. Thank you for joining this morning, and welcome to our presentation on the full year results for 2020. Right, I'm Ian McDonough, I'm the CEO. I'm going to start off, and Steve will talk about the finance slides a little bit later, but I'm going to do the majority of the presentation. So just a quick intro, first of all, for those that are new to the presentation, who we are and what we do. BLACKBIRD is AIM listed. As of last week, we're around 94 million market cap. We have dipped a little this week in terms of price, but as you may have seen in the news yesterday, myself and the chairman, Andy Bentley, dipped into the market and topped up our own share holdings ourselves. So in terms of what our company does, we are at our heart an IP company. Including the patents that are pending, we have 14 patents around our IP, around our technology. And that is everything from the codec at the very heart of the platform that allows for that very impressive user experience, right the way to the very high-end tool sets that we have, all available in a web browser. So very different to other people in the market, because everything is available in a web browser. That means no plugins, no downloads, no configurations, etc. to use our platform. And we are indeed the only cloud-native professional video editor in the world. I'm very careful to qualify some of those things, that cloud-native as opposed to cloud-based, and professional as opposed to a simple cloud clipper. We are a professional tool. In terms of the business model, we're a SaaS model, software as a service, and we sell our access to our platform on an annual and a multi-year basis. We put out a paper this week actually on how efficient and carbon friendly our platform is, which I'll touch on later, but we think that is a very strategically important part of our technology. And it will be one of a series of white papers that we'll be putting out this year around our architecture and the key attributes of BLACKBIRD. Also key to us, and as we go into a post-COVID world, are some of the whys that we have around our platform. And they can be simplified into the words freedom and resilience. Freedom, because we use so little of the resources of the earth, and we can be used on very low-powered computers, on very low bandwidth connections, and available purely in a web browser. It means that the end user, the content creator, has an awful lot of freedom with regards to where and how they create content. As we go into a post-COVID world, we are hearing from our customers how people don't want to be traipsing into the office 5 days a week to sit in a enclosed edit bay. It's not really the way that people want to work these days. The flip side of using very few of the Earth's resources is, of course, that we'd also have a lot of resilience. So for the customers that are bringing BLACKBIRD in to their workflows, the fact that we use very low-powered kits and very low-powered internet available in a web browser means that there's a lot of resilience built into the workflow. We have an excellent board. Other than Stephen and myself, we have some very well-known faces in the media sector. I'll just point out there that our chairman, Andy Bentley, who was previously CEO of Virgin and Electrolux, was a buyer of shares this week. Dawn Airy, who was previously CEO of Getty Images, CEO of Channel 5, and very senior at Sky and ITV and at Yahoo. And we have the newest addition, who is John Honeycutt, who came in just last year, who's just recently been appointed as chair of IBC. David Main is also with the group. He's a previous chairman, and he's an ex-partner of Bain & Company. So we're all shareholders, all except John actually are all shareholders. Stephen has around 18% of the shareholding. and I, with my family, have around 7.5% of the shares. So just a very quick exec summary before we move on. In terms of revenue, we're up 45% year on year. And this is despite the challenging market. I'm not going to lay on the market challenges too thick. You all understand exactly what's been happening in the last 12 months or so. But for us, it's really been a double-edged sword. We've had an amazing tool set to solve people's problems, but selling into a media market that's been pretty decimated. Advertising sales are right down. The sports industry stopped for large portions of last year, and when it did come back, it came back as a skeleton schedule with no bums on seats and much reduced sponsorship. So when we're selling into that market, of course there are challenges. But as you come through the back of that and into the end of COVID, then the fact that we've got a solution that has raised its profile enormously over that period of time, and we're going into a market now where there's a hybrid way of working, a way that people want to mix and match how they attend and where they work from, then we're in a very strong position. Our cash burn has also been reduced 30% year on year, so that's a great story. Most of it's been because of increased revenues. It's dropped to the bottom line, but we're also very tight on cash management. For those of you who have joined presentations before, you'll know that we have a strategy around scaling our business through OEMs. And we've made some super progress there against our OEM strategy, including bringing on Tata Communications, and most recently, early this year, announcing a partnership with EVS, who've already put us into 2 very prestigious international games in the next few months. So we're well positioned to capitalize on the changing environment. And we'd like to just say a few slides, take you through on a bit of a story about where this world has gone and why we think it is so different to how it was pre-COVID. And simply, we think that the world has really gone remote. It's not just about video creation or about content creation. It's really across the whole way that we exist as human beings, and it's everything from the winners in retail, versus the high street or main street, wherever you're calling it from. Whether it's on-premise kit that's now been moved to the cloud, whether it's the global streamers that are taking huge swathes of revenue out of the traditional broadcasters, or in fact Zoom or Teams or Investor Meets who are taking huge swathes of revenue out of commercial real estate and travel. So we're very much on the right side of this, where we've got the right solution for this new world. And we put the last item there, ARM versus traditional chip technology, because we see some comparisons between ARM's model and BLACKBIRD's model. It's not just because it's a UK based or UK originated solution, but ARM really is a low powered but very high quality chip technology, a chip licensor. And we see some real parallels, not yet in the market cap, I have to say, but certainly in the way that they look at the industry. We're a low-powered technology, and we have a high degree of precision and quality. And we could also be a licensor into the video technology. So that's just a little one to tease you with in there, that we see some parallels potentially with ARM. So why are the winners winning? Well, there's probably dozens of reasons. We've just picked out a couple here. It's really about winners win because they can help reduce costs. They can help increase the leverage of human capital. And as we've seen, that's becoming more and more important over recent months, is they can be an awful lot more carbon efficient. But the real key reason why winners win in this world generally is because they're more convenient. People are looking for a much more convenient way of living post-COVID. If we pull this story now back to us a little bit more, one of our key partners last year has talked about the world of remote. Deval Ponder from Tata Communications has said that the number of remotely produced events in the next period of time, we're talking a short period of time, won't just double, it's going to pretty much treble. And the fact is that Tata have brought BLACKBIRD in to be a key part of the functionality within Tata Communications' abilities to help companies to remote produce. Tata, of course, is a global telco. They happen to own around 30% of the global infrastructure, the physical infrastructure of the internet, all that fiber backbone. And so there's a huge amount of market for Tata and BLACKBIRD to approach and touch together to bring on board. And the key reasons why companies like Tata have brought us on board, of course, is that we're very fast. We talk about ourselves as being the world's fastest video editor, and that's every second count. Every second counts when we talk about sports and news. We are incredibly flexible. As I've mentioned, we use very few of the world's resources, and that means that we're on low-powered kit and low-powered internet. But if you're talking about, excuse me a second, adding a user to our BLACKBIRD infrastructure, you only have to provide them a simple laptop. If you're talking about adding an infrastructure, one user to our alternative solutions, there is a huge amount of infrastructure that needs to be added. You're talking about a GPU computer, a fat bandwidth pipe, a Teradici often subscription, local storage, and cloud storage. So we're incredibly scalable for big companies. We're a small company with a very big company solution. And we're very resilient and proven. Now we've been around some time, and we've been in some of the most important workflows in media for some time, and we are very, very resilient. So that ends the first part of our presentation and just sets the scene on the market. We're now going to go through a couple of slides, 3 slides actually, on some of the strategic importance of BLACKBIRD. So this is new information for those that have joined before. And the first slide here is around the pricing of BLACKBIRD versus competition and the share of wallet. So on the left-hand side of this chart, you've got a bar chart that shows the price or the total cost of ownership of a non-linear editor, a traditional non-linear editor based in the cloud versus BLACKBIRD. So you can see from that green arrow that we're around 25% more cost-effective than our competition. Additionally, on the right-hand side of this chart, we've broken out that red bar and that yellow bar to show what the share of wallet is between a non-linear editor and BLACKBIRD. And that's because BLACKBIRD's not selling exactly the same product. We're also selling a basket of services around our licensing that includes bandwidth, it includes cloud storage, and it includes IT support, etc. around it. So for each transaction that the BLACKBIRD makes in the market, a similar size but 25% better price for the end consumer, the end customer, we take about a 10x, a 10 times amount of the value of the share of wallet. The left-hand side chart is something that we've started to show to our customers recently, and they welcome the fact that we can, this market, this information is not generally known in the market, and they're very appreciative of the fact we can show them that saving. These numbers, by the way, weren't picked out of the air by BLACKBIRD. We had an external consultant come in, someone that had worked at Deloitte for 20 years and is now working with AWS, and he did an analysis for us and built a calculator for us. So we show that to our customers now, and they're very appreciative that we can show them these numbers. We of course think that it's interesting for investors that for every deal that we do, that we take about a 10x of the share that the competition do. So I hope that's clear. We're now going to show this is the market opportunity. So this is the TAM and SAM. TAM is the total addressable market, and SAM is the serviceable addressable market. So there are 3 circles on this page. The brown circle represents $1.1 billion, which is the total video editing software market forecast for 2025. That includes all consumer. It includes all high-end workflows for the very high end of media production. It's not the entire market that we play in, because as you might know, we don't have a consumer proposition, and we don't have the very high-end tools. But the pink area, the pink circle, is the area that we are serviceable for. So that's the market that suits our tool sets. So that's about a $0.6 billion, $600 million market, and that is largely split between 2 players, Avid and Adobe. Now, as we just explained on the previous slide, because we make about a 10x of them on every transaction, our market is around that $6 billion, that yellow circle that exists. That includes all the additional services that we add. And the key players in that yellow circle are the majority of the major cloud providers and some telcos like Tata. So the yellow circle is our serviceable addressable market, around $6 billion. In addition to that, we also sell other services that aren't naturally thought of as video editing. So we also sell review and approve, and we also sell legal and compliance workflows that you wouldn't naturally associate with a pure video editing software market. So we don't have the actual numbers for the plus, but you can imagine that it's 6 billion plus. So I hope that's clear. There's a few, it's the first time I've presented these concepts this time around, but I hope that's really useful additional information around our market size and market opportunity. Now, another important strategic area that we focused on recently is around our efficiency as regards carbon and carbon emissions. Now, the reason that we've focused on this is because we've always known we've been very efficient. We use very few resources, as we said earlier, but we didn't know how much different it was. So we brought in an external consultant, Green Element, to do the analysis for us. The infographic below on this slide talks about the production of a 2-week sporting event and the amount of carbon that's emitted by just the video editing portion of that event. So we're a Wimbledon-based company. You can imagine this is a Wimbledon event. Now, the red bar represents the on-premise traditional systems. The 174 at the top of that bar is 174 tons of carbon that's emitted in that 2-week event. That is equivalent to the loss of 2 tennis courts surface area of sea ice. So it's quite considerable and quite visual. We are less than 10% of that, and we're also 80% more carbon efficient than a cloud-based system, because a cloud-based system with traditional systems is basically putting all that high res into the cloud and powering it up there. It takes a lot of energy. You don't have to travel, but you do have an awful lot of data centers, data transmission, and storage, etc., that needs to be powered. So it's quite a stark difference, and I think it's really important to be able to show that difference, not only because it's good for our conscience, and not only because it's good for our reputation, but it's also very good strategically, because we're talking now about a world where some of the largest players in the world have decided or are being forced to by government to go carbon neutral. Carbon neutral can be achieved in 2 ways. It can be achieved by producing less carbon, or it can be achieved by buying offsets that balance out the carbon that's emitted. We would advise that the focus really be put on producing less carbon. It's better for the atmosphere, and it's certainly better for their finances, because buying carbon offsets is an expensive deal. So as all these big companies move towards a carbon neutral environment in the next few years, then we would advise strongly that existing technologies that exist today are leveraged correctly. And if they are, then we can have a large positive and immediate impact. So an important report that we are getting out widely. I was actually interviewed on Sky News about this last week. And in the next couple of days or next week or so, I think I'll be in Forbes. And I've been interviewed on numerous industry press and conferences, etc. So you will see more of this. We will be taking this part of our strategic advantage much further. So our direction is very constant. We haven't changed this at all. We came from an artisanal tool and working in small areas of London, which was very small deals, let's say, when I first joined the company. We moved it very much into an infrastructure play, bringing on board the likes of the world's largest global news organization, or the US State Department. What's been the focus of the last 12 to 18 months has been bringing large OEM partners on board. OEM gives us the chance to scale, gives us the chance to be part of an end-to-end workflow, to work with larger sales teams than ourselves, and to get to hit multiple fronts very, very quickly. I've mentioned Tata already today, so I'm not going to go back onto that again just yet. But the other deal that we mentioned that we have announced just recently has been EVS. EVS are a large company based in Belgium. They have they're synonymous with live sport production. They're a hardware broadcast manufacturer that sell into sports, news, and entertainment. EVS are very proud to partner with BLACKBIRD, and announced it. We announced it a few weeks ago, and they've already deployed us into 2 of the world's most prestigious sporting events, taking place, one in the summer of this year and one in the winter of early next year. This is very exciting for us. It is game changing in many ways. Mostly because when we get to that second games, we will have built around our platform single sign-on and multi-factor authentication, as well as a number of APIs on user management, on content management, and on data management that take us into a new tier of product. And it's a huge, exciting and ambitious move forward, and shows a lot of the trust that is put now in the Blackbird platform. Because when we get to those second games, we will be used as a central hub for the world's international rights holders, which is pretty much every country in the world, will be able to, should they wish to, plug into Blackbird and edit their own sporting clips from that central hub, and publish from there to their own individual country national networks. So really exciting step forward, and watch this space on that. Right, now, public cloud. I've talked about this in several meetings so far, and this is now really a front and center of my time. Public cloud will allow us to reach a much more mass market. We're talking with the largest public cloud company that there is, who are very happy to support us in terms of credits and in terms of solution architects, to make sure that the cloud product that we built for public cloud is going to be absolutely approved and supported from their marketing and sales teams as we move into that world. This is something that I hope to be able to show you when we come around to the next presentations later in the year. It's very much front and center of my approach right now, and I think this is something that we're actually also doing with one of our key OEMs, because while we have the cloud expertise in many cases, our OEMs have the end customer expertise. In many cases, they've got hundreds of customers around the world. So by working together with them and passing ideas between us, we can make sure that that is an absolutely world-class product that's being built on the public cloud. And as I said earlier as well, it's really important for us to be carbon efficient. So when we're working with our own cloud, the Blackbird cloud, we're fully in control of that. As we now design our public cloud product, we will also make sure that it's as efficient as possible in terms of cost and in terms of carbon efficiency. Okay, so in terms of the infrastructure customers that we brought on board last year, we don't publish every individual deal, but we're talking about some of the major ones here. A&E Networks, who is a major customer from 2019, they came on board and doubled their order with us in early last year. Riot Games, who came on in the summer last year, they came on for short term because they needed to get their Los Angeles-based editors to have access to their broadcast streams. We helped them out very quickly, and they managed to turn around content very, very quickly for that. That was a short-term deal that's now been extended into a much longer-term deal. And the NHL, again, another short-term deal from last year. We managed to get the NHL back to return to play when the Stanley Cup playoffs happened in late summer last year. We helped them when they were all dotted around the country. We've now been extended to a multi-year deal with the NHL and been reinstalled back into their New York hub, so that we're a long-term player there within the NHL's infrastructure. So they've seen the value not just in terms of a COVID emergency, but now we're into a long-term deal with them out of New York. I should mention that we used it within the A&E setup and right the way across their organization now, right the way from all the content creation departments, right the way through to marketing, social media, and all the way through to legal and compliance. A&E are so happy with us that they've actually submitted our work with them for a national Emmy. So that submission has now been put towards the Academy, for television and film. And the award show is later this year, so let's hope we get some great success there. They also created a video for us, which really talked about how much they were passionate about Blackbird and the solution, and how delighted they were that they had our solution in place when COVID hit last year. So the OEM highlights. well, Town News is probably quite familiar to a number of you. Town News, we are 100% penetrated within Town News deployments and in 50 plus local news stations across the states. But the key ones I want to focus on today are these ones at Tata and EVS. Tata, we announced a deal together with our partnership when we launched our partnership in August last year. That is a large Indian broadcaster. It's a household name. You will all be familiar with the broadcaster that we have signed up with. In addition, we also have a second deal with Tata. That is a global sporting franchise, and we haven't announced that one, but it's something that is already in the books, and we're already operational on it. We're hopefully about to announce a third deal with Tata shortly. EVS, I've talked about a lot, but EVS is a super partner. It's early stages, but it's a super partner for us. Really prestigious within our industry, and the fact that EVS is has ambitions, very public ambitions to move towards the cloud, and BLACKBIRD obviously provides a fantastic gateway to the cloud. This is a really an excellent partnership made in the cloud, let's say, and we expect to see a lot more information, a lot more action and deal flow from the EVS side of things shortly. I know it's certainly in the ambition of the EVS team to have us deployed very widely within their customer base. Okay, so just a last slide from me before I pass to Stephen. We are really aligned with our platform development and roadmap and our strategic direction. Everything we have on our roadmap is comfort and additional reasons to buy for our OEMs and customers. So first of all, security. You're all investors in this business, so you will all be aware of how important security is. We've since the last time we came out to the road, we've moved from being SOC 2 Type 1 accredited to being SOC 2 Type 2 accredited. And what that means is that all the processes that we put in place for Type 1 have now been audited and approved. We're also building a single sign-on structure and multi-factor authentication structure for not just for EVS and the big games that we're doing next year, but for all our OEMs, and indeed for big studios that are requesting multi-factor authentication. The APIs, this is really important for OEMs. They want to be able to bring in as much data as possible from either manual feeds like Opta, or indeed AI engines, or indeed user or content management APIs, just to make that transition into bringing BLACKBIRD into the stack as frictionless as possible. And we've talked about public cloud. This is something that you're going to see in the very near future, as we work very closely with those teams that we mentioned earlier, from these very big public cloud companies to make sure that our product is absolutely world-class and as efficient as it possibly can be. Okay, I'm going to pass over to Steve, who's going to take you through the finance slides.
Good morning, ladies and gentlemen. First of all, I'd like to apologise for not having my camera on, but I'm having bandwidth issues my end, which is a little bit of the story of the times at the moment. As Ian mentioned up front, our revenue increased by 45% year on year to 1.57 million. North America is a really key market for us because they are the trendsetters in terms of migration to the cloud. And we saw a doubling of revenues there, a very positive sign, to just under £1 million. Again, as Ian mentioned a little bit earlier as well, it has been a very challenging environment. We saw a hiatus in production, live sport was on hold, and post-production stopped. We saw companies, sweating their assets toward the end of last year, towards, the end of Q3 and Q4 in particular. And again, just to give you a little bit more color around this, I was talking to a colleague who works for one of the major studios just last week, and he was saying that, up to a third of their staff were being laid off. So businesses were having to react to the pressures they were getting in terms of a reduction in top line, which made it challenging to close deals. The good news is, at the start of this year, we've seen a flurry of new deals and with confidence returning to the marketplace as the vaccination program rolled out. If we now move over to the right-hand chart, what you have there is an indication of our future order book at the end of 2020. So in totality, our order book was up 3% to £1.93 million. But actually, this hides a little bit of a story. So if you go to the graph and look at year one, the yellow bar chart against the orange bar chart, you'll see the yellow bar chart is much higher. And that's showing that our revenue secured for the next fiscal year, as at the end of 2020, was actually 33% higher than it was at the end of 2019. If you look at years 2 to years 4, you can see the bars are pretty flat. The yellow and orange bars are pretty similar. And again, this was definitely something that we saw last year with the impact of COVID, that companies were trying to mitigate their risks, so they didn't want to enter into long-term deals. The great news again is that, we've seen that trend change. As Ian mentioned earlier, we did short-term deals with the likes of Riot Games and NHL, and now they've signed up to much longer-term contracts. I'm really, we pride ourselves in terms of our customer care and looking after our customers. We speak to each of them on a quarterly basis, and getting feedback on the platform and on our staff, and we get really positive, feedback there. And our customer retention is very high. Of the OEM and infrastructure customers that we had, generating revenue in 2019, we had 94% of those generating revenue again in 2020. And again, just a reminder, we have very high gross margins, so that when we do sign up new deals, the vast majority of that revenue falls to the bottom line. So moving on to cash burn, we made significantly, good progress there. It was down 32%, or £750,000, to £1.58 million. This was driven by the increase in revenue and a tight control of our cost base. Together with the shift that we moved to a SaaS-based model in 2019 and charging annual license fees up front. We do invest in the business, where is required. And again, we took on some incremental staff in terms of R&D last year, and we're going to take on some people this year too, as it's important to us to, keep our competitive advantage and, make sure that we accelerate those important items that Ian flagged earlier. The company is in a very strong financial position. We don't have any debt, and we had over £6.5 million of cash and short-term deposits at the end of 2020. I'll now pass you back to Ian.
Thanks, Steve. So we've already finished the presentation in a few slides' time. I just wanted to give everyone some proof points from the market, from our customer base about how they feel about Blackbird. I won't read every quote verbatim, but some of the language that's been put onto these slides, it's really precise, and it really explains in detail the kind of attributes that they find in Blackbird and what separates us from the rest of the tools that are out there. I mean, the key thing here is the fact that they see us as a leader, and we've had it, quoted just in the last few days, is that we're streets ahead of any other tool that's trying to do something similar in the market. Streets ahead. So much so, we won the Emerging Tech Company of the Year, awarded by Sports Pro in December last year. Sports Pro, one of the most respected industry bodies within the sports production field, and really fantastic visibility for us as a company. So I'd like to conclude. We are a well-capitalized business. We have plenty of cash behind us. We are delivering on our OEM strategy, and that's got its own momentum now with some of the biggest sporting events and potentially the biggest sporting portfolios of businesses in the world. And it's got its own momentum. It allows me now to focus much more on getting the public cloud solution and product designed, built, and working fully. And we see that as a 2021 product. The carbon efficiency is but one of the areas that we are strategically important around. Another is cost, which we talked about here today, but also user experience. And carbon efficiency is going to be the first of a series of white papers that we'll get out this year that will highlight key attributes, key points of differentiation in our product, that are related to the architecture. So you can watch out for those white papers, because what's really important to us is that we are indeed trusted at that strategic level. There's plenty of questions, I'm sure, about our revenues versus our market cap. And then the key thing there is that we're a strategic piece of software with very high barriers to entry, that could be plugged into much larger infrastructures than we are currently, that would quickly leverage up our revenue. Okay. Thank you very much. That's the end of the presentation. I know that we've got quite a number of questions, but
quite a few. Ian, Steve, thank you very much indeed for your presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of the screen. But just while the team take a few moments to review those investor questions submitted already, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation is ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Ian, Stephen, we have received a number of pre-submitted questions ahead of today's event, and I know quite a few of these I think were addressed in the actual presentation, but perhaps if I could just start the Q&A session off with a couple of these to start with, that'd be great. Sure. The first one we've got here is, because of lockdown this year, would it be possible for shareholders to meet in person with the company, say at the half-year results, as it's not been possible to meet up at the last 2 AGMs?
We very much hope so, yes. I'm not sure that we normally have our AGM in the middle of the year, so I'm not sure that that's going to be time enough to get everyone vaccinated and allowed to meet. But hopefully very, very soon. We would absolutely welcome meeting everybody in person. Thank you.
And the next one reads as followed. I'm interested in the relationship between the various entities like Tata, Zixi, EVS, AWS, etc. Are these all competing entities, or do they work together to form a larger ecosystem?
That's a really interesting question, and it's largely the second part. They're largely a part of an ecosystem, but you can imagine that all kinds of technology has various parts of overlap. So with the ones you just mentioned, have some overlap in some areas, but they're generally not true competitors. However, I wouldn't rule out, unless we did sign something exclusive, which we haven't done yet, rule out there being competitive tension within our partners. We're very much a Blackbird inside model. And like any piece of technology that's componentized within a larger stack, then some of those stacks will compete. So yeah, no problems with that, and being part of that competition.
That's great, thank you. Next one we've got here is, what is your prediction for how long your billing relationship will grow with how your billing relationship will grow with the major East Coast financial news organization in 2021?
Yes, the anonymous confidential financial news organization out of New York. Well, it's going very well. They're very happy buyers of the technology, and we've worked hard to expand the technology across their base. I have to say though, I don't think that they're a very closed bunch, and for many reasons they're in a very competitive environment themselves. So I think it's unlikely that we'll be announcing anything around big expansions there. But safe to say that it's going very well.
Great, thank you. Next one we have here, your website states the following: Blackbird partners with high-profile global media and technology organizations to extend the capability of its cloud video production platform. Can you please elaborate more precisely what this means, and please provide some specific examples of current collaborations?
Yes, what it means is that we're a component in a media workflow. One of the key reasons for going into an OEM strategy is that we want to make it easier for our customers to buy us with other types of solutions. So an example would be, we haven't really talked about it today, but EditShare is a customer of ours, or a partner of ours, I should say. And EditShare are really focused on storage. We look at EVS, they're focused on live production. If we look at Tata, they're focused on infrastructure. So for us, we can't do everything, and we certainly don't do everything. So we're going to partner with types of companies that can provide an easier reason to buy for the end customer, because we're attached to that.
That's great, thank you. And the last pre-submitted question we have here is, what is your competitive edge? Who are your competitors, and why do you think you'll beat them? Isn't video editing going to become a commodity product?
If you unmute Stephen Streeter, I think he'll be best placed to.
Yep, I'm unmuted. Can you hear me? Yes, so with any technology like this, it's constantly moving, and the things that 20 years ago or 10 years ago were very unusual become much more standardized. And what we've done to answer that and to preserve the value, in fact, increase the value of our system, is to constantly innovate and constantly move forward. So, for example, the chart that Ian showed you earlier showed that for share of wallet, we get a lot more than a traditional editor. In fact, we make 10 times as much revenue for what was previously have been seen as an editing solution, because the editor is only 10% of the value that we provide with all the other things in it. And of course, it's very easy to just, to describe it as an editor, but it's actually a whole platform and it has a whole load of infrastructure behind it. So I think it's constantly moving forwards, constantly adding value. And particularly as we're in a disruptive stage of the world, as people are moving much more to the cloud and to the web. Apparently the internet market is 12% of UK GDP. It's a fast growing area, and we are not just sitting with our original editor. We're moving much further outside that area.
It's fantastic, Stephen. Thank you very much for that. That concludes the pre-submitted questions. We've obviously had a number of questions submitted by investors today, and due to the number of attendees we have, the company may not be in a position to get around to every single question, but they can review them post the event. But perhaps I could hand back to you, Ian, just to click on that Q&A tab and just scan through the questions that have been submitted.
Sure. Just
if you could read them out and give your response where appropriate, that'd be fantastic.
Yeah, so this is a long question, so forgive if I stumble on this one. In trying to understand the potential for a step change in growth to reach profitability, is it possible to have a report on progress of sales within existing OEM clients to give some color on what can be expected in the coming year? In order to reach profitability, are any of the OEM deals or any new OEM deals required, or will existing OEM deals be sufficient? What else is required to reach profitability? Well, we're not issuing forecasts on profitability, so that answers a little bit of your next question as well. But we do think that within our existing financial base that we will reach profitability, that we'll reach cash break even. Will it need more OEM customers? Yeah, I think it will. I think that we would like to have well, we've got quite a few in the wings as well. We would like to bring on board fairly soon to give that real boost, and a little bit of internal competition doesn't ever go amiss. In terms of what we've updated on, well, we've talked about the 3 deals, 2 in and 1 in the offing with Tata. We've talked about the deals with EVS, and that the town news situations. We've got, of course, growth and other companies within, Delta Tray and IMG, etc., also OEMs. But I expect to see more on the OEM front shortly. We're very confident that there's going to be more things coming through that area of the business pretty soon. I hope that answers your question sufficiently. Next question. Just a quick, Steve White, can you see these questions, by the way? I just want to make sure.
I can, Ian, yeah.
Okay.
I'll take number 5, yeah. It's on CapEx and R&D spend. Do you
Great.
see any significant increases in the coming year? And how do you see the trends in these key figures progressing? As I mentioned earlier, we will invest where we see value, and R&D is one of those key areas to maintain our competitive advantage. I would have thought that, you'll see probably, a 20%, increase in R&D spend, over the next sort of a couple of years or so. But again, in terms of value, that's probably around, sort of the 100 to 150,000 mark.
Great. There's a question on Tata again, but I think we've clarified that for Graham.
So Ian, it's probably good if I give a little bit more colour on Tata, because I know I've seen a few questions in this area. So
yeah, sure.
What I'd like to say is that we gave sort of previous guidance in that we believed that the deals that would land would fall within the range of $50,000 to $100,000 per annum each. And our first 2 deals closed. When you combine them, yes, they fall within that range.
Good. Question from Tim: if you do raise funds by issuing equity in the near or medium term, can you ensure that any fundraise includes an open offer to existing shareholders? Thank you, Tim. It's not in the plan. I have to say, as we've said, we think we can get to where we we would do on our current base, but noted. Mark, company has floated the term public cloud a few times. BLACKBIRD is already available on the public internet, so it feels a bit contradictory and would appreciate some clarification. What is the limitation at the moment that makes the technical development necessary? What new commercial opportunities does it create? Stephen, do you want to talk about the technical development first of all, and then I can talk about the opportunities it creates?
Yes. So we have our own cloud that we created ourselves. It's very efficient, but it is a fixed size. I mean, we can add to it a bit. But if someone came along and wanted 10 or 100 times or 1,000 times the volume, that would be very hard for us to implement, because our job is to develop software, not to have racks of servers. So what the public cloud allows is for us to have essentially unlimited scale. So although we're on the public internet, we're using our own cloud at the moment. And the plan is to make our offer available using the public cloud infrastructure. And the main providers that you saw on in the slide, Microsoft Azure, Amazon Web Services, and Google Cloud. And maybe Amazon Web Services is our current preferred avenue for that. And we have clients saying, if we had it on Amazon Web Services, they could have, for example, local servers in their own country, because some countries, like governments and people, need to have the content stored locally. So that is a natural way to increase our scale without us having to do lots of sort of simple work of plugging in servers, but to do the high value work.
Yeah, in terms of commercial opportunities, Stephen's absolutely right. It provides that kind of opportunity, but also having a behemoth the size of AWS or indeed the other public clouds provides a much larger base to talk to, provides the leverage of their sales and marketing teams, provides comfort sometimes in the 5 nines or 6 nines that the companies ask for in terms of reliability, etc. So I think there's just it helps with opening up with vast parts of the market, becomes a real mass type of market rather than medium term or large scale market. Okay, there's another question on equity raising, which we're not planning, so I'll move over that one. Will the 3 or 4 ongoing Tata deals be completed in H1 2021? Certainly, yes, that's what we would hope. Through Tata, you have access to 400 potential customers. You have signed 2 and a third hopefully on the way. What is your target out of the 400? And what is the revenue targeted this year and next? Well, I think that's a question around targeting and forecasts, which we don't do. But what I did say when we came out to the market last time was, when you see what we did with Town News and how we managed to get into that number of customers, I don't think that's unreasonable to look at and look at Tata or look at the other OEMs we're bringing on board. We've got 50 plus deals with Town News. I don't think that's unreasonable. Okay, you indicated NHL and Riot Games have now signed much longer contracts, and yet it does not seem to show in the contracted revenue. Were these signed up pre or post year end? Steve?
Yeah, I'll take this one. Yeah, so we signed one of those deals prior to the end of the year and one post year end. I gave out guidance as well in the press release in terms of, our order book as of today's date is 1.95 million. So both of them were included within that figure. Again, we gave some indication, even though it was been a tough, tough few months or so. With, as I mentioned earlier, we're seeing confidence return, and our revenue secured for this year is with 1.2 million, and that's up 33% compared to a comparative figure last year.
Good. There's a question there from Pat about Tata as well. Would you like to pick that one up, Steve?
Yeah, I'll read it out. Is revenue from Tata customers included within the contracted revenue figures in Monday's RNS? Yes, that is the case. Yeah.
Good.
And again, I spoke earlier, and with the deals above the 50 to 150k range suggested, as I mentioned earlier, yeah, if you take the two combined, they fell within the $50,000 to $100,000 per deal per annum.
Yeah, which of the OEM partners delivered revenue to date? Well, the ones we've mentioned just now, which was Delta Tray, IMG, Town News, Tata Communications, and EDS. Tim G. what is the average duration of contracts signed up in the last 12 months? Is there a trend for contracts to increase in duration as you become more established? I think Steve pretty much touched on this in the finance slides, is that there was a shortening of deal cycle, but there was also a shortening of contracts as people were were mitigating risk and signing up for short-term deals. But as we've said in the riot and in the case of NHL, and actually in case of A&E, which is not yet in our numbers, that extension contract, that they are extending now. So the confidence has in vastly improved and returned to the market, so that they are now signing up long-term deals again. And yes, the more we become established, the more confident customers are with us to extend their relationship with us. Okay, there's a question here on, hang on. There was an indication from a customer at the start of the year that they're keen to, I can't answer that, I'm afraid, because that is a confidential, as I explained earlier during the presentation, Pat, I'm afraid. Are Zytec and Veritone partnerships still active? And if so, what hopes do you have for each? Zytec is not active. I have to say that wasn't in the end a suitable partner we weren't suitable partners. And Veritone, we are in discussion with Veritone continually. They're having really fantastic COVID with AI coming to the fore. So that's an interesting discussions, but nothing's come from that. How many of the 400 Tata customers do you estimate will learn? I think we've covered that one. What is the status of Ascent, the slimmed down editor Stephen Streeter mentioned during the previous presentation, and who is the target market? So what we've done with Ascent is that we've reconfigured our front page, our UX, to make it simpler to launch our product now for a new editor, so an editor that is mainly just focused on social media, and one that is much more experienced. So we've adapted the interfaces that we currently have to work with Ascent. That doesn't mean that we've stopped working on new product variants or variations, but that's the ones that we're going to talk about. That one we can talk about today, is that we have actually all built into our platform. We don't actually call it Ascent. It's called the the kind of simple interface, but it is something that we've adapted our current product for that market. Sorry if this is in the slides, but do you have specific KPIs with regards to reducing carbon emissions? Great question. Look out for as we advance our research into carbon emissions. This may well be something that we publish with regards to targets. What we really want to do with regards to the emissions is to be able to explain and demonstrate, along with a total cost of ownership reduction, also what a reduction in carbon emissions will mean to a company in terms of tons. So we're building that calculator now with Green Element to make sure that all of our customers will understand what kind of saving of carbon emissions choosing Blackbird over choosing other types of solution would mean. So yes, thank you very much for that question. That's something that we're really focused on. Sean, is public cloud storage only, or do you envisage developing a complementary display platform too, like Vimeo or YouTube? I have to say, developing Vimeo or YouTube is not currently in our strategic plan. Whether we would one day work with Vimeo and YouTube, that may well happen, but we're looking not at public cloud storage, but about housing our proxy cloud, the cloud that works with the proxy and has the editor inside it, inside the public cloud. That's where we're going with our cloud product. When would you expect to be cash positive? It's a question about forecasts, which we've said we're not answering, but we are saying that we have enough cash in our resources to get to cash positive. Stephen, would you like to field the question from Dan on Blackbird 10? When is Blackbird 10 due to be completed?
Yeah, I can ask Blackbird 10 and also give you a little bit more background. So when Blackbird 9 came out, which is what everyone's using, it was about 3 or 4 times the resolution of previous Blackbird, and double the frame rate. So we're having about 8 times the pixel rate. And that was a big jump. So we haven't had a lot of demand from our existing clients for the next upgrade. But because we're a technology company, we're constantly pushing. And so with Blackbird 10, we're expecting a similar increase. Originally, it was going to be 4 times the resolution, which would take us to 720p. which you need a high-res screen to edit at 720p. We'll probably push minimum 1080p and probably quite a lot further. So maybe a factor of 9 minimum increase. So we'll have the first demos later this year. We're not sure what shows we'll be doing, but that might be a good chance to see it. Ian might talk about that later. Probably, I mean, it depends on which customers who actually need that sort of resolution for editing or for other uses that we have. But I'd expect the first customers to be trying it out later this year.
Yeah, but great question. Thank you very much, Dan, for asking that. Question from Richard. As a leader in video cloud editing, do you anticipate to launch a new product in the market which capitalizes on your strength, e.g. a social media app similar to Eva or TikTok app or something similar to YouTube? I think the key thing here is that we demonstrate, or we showed on a slide around the market opportunity, that we have a huge market opportunity within our current focus. If we were to move into anything around consumer, it would definitely be with somebody that understands that market and has the financial clout far more than we do within our current base. So never rule it out, because I think that you know, consumer apps around video editing and video will rise in importance, and we have something very, very clever right at the heart of the Blackbird platform, but it's not something that we're currently part of our strategy. But I say we'd never rule that out to partner with somebody that would be able to do that. Question from Andrew. You have pivoted so well from the former target market to the infrastructure model to evolve OEM and cloud. Has the industry kept up with your capabilities, or do you still need industry accelerated awareness? Well, we tell our story pretty well, I think. Maybe not me, but the sales team tell our story pretty well. And our marketing team, I think, are really second to none. I think we have got our name and our profile really high. And I think people are much more, coherent around the Blackbird proposition and our USPs now. However, this year, as I mentioned, I'm going to put out 4 papers. We're going to put out 4 papers around our carbon efficiency, around our total cost of ownership, and around our speed and user experience. That all plays back to that unique architecture that we have, to make sure that we, for all the engineers and for everyone that likes getting a little bit more detail, can really understand the clear blue water between us and any of the competition that exists. So thank you, Andrew, for that question. I've held Blackbird shares previously for Forbidden Technology since the first listing back in 2000. The shares were, I think, worth more 20 years ago than they are today. Do you have any comments on that?
They weren't, for a start. They were quoted at 20p, but we did a share split 5-to-1, so that would be equivalent to 4p in today's money. So they're up, getting up, well, just over 6 times. But apart from that, I mean, obviously we're not happy with 6 times, as you know. Ian, perhaps you'd like to carry on from there. 6 times is not enough.
Well, it's not, when I joined the company, there were 4p. So I think we've done okay in the last 3 years, and I hope the people that bought when I came on board are happy indeed. I've got much bigger ambitions from where we are today, and I hope that was demonstrated by the fact I bought shares yesterday when they were even higher than they are today. So that's the comment I'll leave you with. I'm not going to say that we're going to get to X or Y number, but I am far more ambitious than we are currently, and I think we can really do it. We're uniquely placed leadership position in so many strategic ways, and the market has really shifted towards us. Timing is everything, as they say, and maybe Stephen's timing was a little early, but I think our timing is fantastic now. And as much as we, it's been an awful time with COVID, etc. It hasn't been a bad result for Blackbird as a technology. As a technology, the market has really shifted again towards us. So very ambitious. Good. What is the term of your standard contract going forward? Well, we don't really do anything less than 12 months, and we really aim for multi-year deals, Paul. Colin, what has happened to the 40 leads a month that you were talking about last year? Were they landed and not announced, or have they mainly gone away? the thing about last year was, I think we touched on it, it was a tough market. People were looking at a lot of different solutions. Most of them weren't followed up on, and assets were generally sweated that we saw last year. So people had hardware that they'd had for 3 years. They generally said, well, we can keep it another 12 months. What we're seeing now, though, Colin, is a real uptick, both in the numbers of leads that we're talking to, but also in the conversions of them. So as the confidence has returned, then we're very well placed. Peter, can you find a broker to provide some estimates of the market? Does that mean the total addressable market? I think we've covered that one, but it may mean something else. So I'm sorry. I'll answer your question. Maybe if you can supplement it with something else to maybe explain it.
Ian, I can take that one. I think they're trying to say, as we've stated, not currently issuing forecasts. That is the company's decision. That's not the broker's decision. Yeah. We really need to get a regular cadence from, a few OEM partners on board. We've just started our relationship with Tata and EVS. So once we get into a regular cadence and we can see the volume of the deals and how quickly they come through, we'd be in a position to actually issue forecasts.
Yeah. The BBC did an in-depth evaluation of BLACKBIRD a couple of years ago and didn't seem ready to move ahead. Has COVID changed that view? I don't want to kind of talk about individual, potential in depth. What I would say is that as we move into that EVS relationship that's happening around those two international sporting tournaments, and especially the second one that's happening in the winter next year, that will open up BLACKBIRD to pretty much every international rights holder, which is in pretty much every country around the world that has those rights. And BBC Sport will certainly be amongst those that are offered that. But BBC has a policy where they will sweat assets for quite a number of years before moving ahead on another purchase. Generally, it's 7 years. Right. Andrew, thank you for the earlier question. Grabio seems to have a client list which covers the UK domestic champions like ITV and Channel 4 and Premier League and Wimbledon. Are you aiming for the same customers, and is this a product with the same functionality? So yeah, good question. So we have two areas in which we compete with a group of competitors. One is on the social media side of things and social media clipping, and that's where Grabio generally sit. But they also have some live switching as well, part of their platform. And the other side of it is where we have the much more sophisticated tools that are the heavy duty ones like Adobe and Avid that make the feature films and Game of Thrones. And BLACKBIRD is a technology that sits across those two types of organizations. So often what we find is that we will replace either or the likes of Grabio or indeed the likes of Avid and Adobe. And often you'll see our customers take one tool, i.e. BLACKBIRD, rather than having to buy two tools because they're two separate types. So some of the times that we are competing with Grabio and some of the times we're competing with Avid and Adobe, but we don't have the same functionality, although there will be some overlap. And I think the direction of Grabio in particular is going much more towards the live switching rather than the high-end editing. So we see more value for us in terms of the higher end of that editing side of functionality. Right, okay. So I think that's pretty much the end of the question. What type of news might we expect to hear next? Exciting news, Dan. That's the key thing here. We'll hopefully have some very exciting news for you soon. But I certainly will be around OEM. It will certainly be around our core markets. But also, I think you might have seen in the last few weeks that we've had news around new verticals like e-learning. We've had two deals. One we've announced, one we haven't announced in the e-learning space. So it's a new exciting new vertical for us. I think the key thing there about the e-learning deals as well is that we've pushed out processes that were kind of the high end, so the kind of Adobe and Avid type workflows, because those two companies that we sold into have got distributed workflows, got teams all over the world making content, and we can, we talk about having the fastest video editor in the world, and we can shave seconds off sporting workflows. However, when you talk about this kind of e-learning workflow versus an Adobe or an Avid system, we can shave hours off a workflow and sometimes days off a workflow. And if you add it all up, you can even call that weeks at some point. So the fact that we've got that kind of broader church of videographers and video companies now talking to us is a compliment to Stephen and his team in terms of the situation that you have with our tool sets and our APIs, but also the fact that the world has changed and people now are understanding that the time is money and they want things to be faster.
Ian, Stephen, thank you so much. I think you've pretty much addressed every single question you've had through, so thank you very much for your generosity and your time. And of course, if there are any further questions that do come through, the company will be able to review those and will publish responses where it's appropriate to do so. Ian, just before I redirect investors to give you some feedback, perhaps if I could just ask you for a final few words just to wrap up, please.
Yeah, I mean, I've got the conclusion slide up now, so it really is about that to everybody. You know, we're in a great shape financially. We're in a great shape reputation-wise. I think that people look at us as leaders in the industry. Strategically, this is very important too. So we've talked about cost, we've talked about carbon efficiency, we've talked about share of wallet. So, you know, want to leave everybody with the thoughts that once our component of this workflow is plugged into much larger machines, then you can really see the shift in that revenue line. So I'll leave it at that. Thank you very much.
Fantastic. Ian, Stephen, thank you very much for updating investors today. Could I please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback. If you've accessed the meeting from our website, the feedback page will appear. If you've accessed it via the link in the email, you'll just be sent back to give your feedback. That'll be fantastic. It only takes a few seconds to do so. On behalf of the company, we'd like to say thank you very much indeed for attending. And that concludes today's presentation. Thank you very much and good afternoon.